Good evening, everyone. I'm John from Mongo Capital. Welcome to this edition of Mongo Spaces. Tonight, we'll be diving into how alternative data is transforming credit scoring and enabling financial institutions to make smarter lending decisions. Joining us today, we have Dr. Victor Kiplagat and Engineer Sami Kariuki from Speed Mobile, our host for today's Team Kipchumba.
Thank you so much. Thank you, Mongo team. Thank you and welcome everyone. My name is Tim Kipchumba. I'm happy to co-host today's session, Revolutionizing Credit Scoring, the Power of Alternative Data. The focus is looking at how alternative data is being used in changing credit scoring and helping financial institutions make better lending decisions. We will have the Spin Mobile team about 30-40 minutes, and then we will allow everyone else to ask questions. The spirit of this is that we all learn together. Certainly today our guest is Victor and Sami, the Spin Mobile team, a team that I've known for a while. Full disclosure, I helped them raise their first seed round and they've done a fantastic job at supporting their customers. We can start off with Victor. Please tell us a little bit about you, your journey, your career highlights.
Thank you, team and Mongo Capital, for having us today. We don't take that for granted. And team, you mentioned about full disclosure. I also want to do a full disclosure that Team Kipchumba is my mentor. He's somebody I look up to. I think it's good I mentioned that. My name is Victor Kiplagat. I'm the co-founder at Spin Mobile, currently the CEO. My journey really has been more in technology, so I consider myself a technology professional. I have about 14, 15 years of experience in telecoms. Started my career in Airtel, Conviva, and moved on to other telcos and into Fintech and more now into data analysis. I'm passionate about the responsible use of technology. Looking forward to interacting with all of you today.
Sami.
Thank you, Tim. My name is Sami Kariuki. I am the CTO at Spin Mobile. I've been in tech for more than a decade now. Started with a company by the name Finance, which is where I actually met. And since then, I've worked in digital lending, in data, digital payments. I'm very passionate about using technology to create solutions to daily problems. That's my passion in data comes in because it really helps to solve problems that people face on a daily basis.
Thank you so much, Sami and Victor. I got to know Victor a couple of years ago. Actually, professionally, we ran a mentorship program and we continue to do that now for nearly 6-7 years in a row. But then, Victor, maybe you can just tell the audience a little bit more about Spin Mobile. When you began, what you're doing now, where your focus is. You've not really been a company that has been consumer-facing. You've been business-to-business company. Maybe you can just tell the audience a little bit about Spin Mobile.
Spin Mobile has been in existence for about 5 years now. We started it way back in 2020 with a gentleman who is now late, John Amogi. And we were pivoting from lending systems. When we started Spin Mobile, we were building core banking systems for lending institutions. But with time, we realized that the bigger need was around risk management, how we can help lending companies to manage risk. So that's how we brought in data analysis and credit scoring. Basically, if you look at the 5 C's of lending, we were feeding into how we can be able to determine somebody's character, basically the behavior and the willingness to pay, and also the capacity of that borrower to be able to afford that loan. We call it affordability analysis. And of course, this is happening at a point where there's a lot of discussion around where technology and data privacy is meeting. And that's how Spin Mobile came into that space. We have since grown to 3 countries. We are now in Kenya, Uganda, and Tanzania is our second biggest market. We are currently serving over 200 financial institutions, ranging from banks, microfinance institutions. Actually, that's the bulk of our customers. Microfinance banks, BNPL players, mobile lenders, SACCOs, and lately now getting into audit firms, listing companies, and investment fund managers. So basically, how the institutions that leverage on data to make lending decisions. We are mainly known for statement analysis. So what I mean by that is how you can automate your analysis of bank statements, mobile money, till statements, payable statements. That is for the lending companies. And then we use that data to build credit decisioning scores and literally an engine that is able to tell you about the 2 C's that I talked about. The character of an individual, the affordability. So basically building behavioral risk models, affordability models, and also just bringing in a one-stop shop for lending companies. What I mean by that is if you're a credit analyst today in a financial institution, we provide you that platform where you can do the financial analysis. You can also be able to do verifications on KYC, getting to know this person. So APIs like IPRS come in there, CRB, anti-money laundering APIs also on PEP and SIPs. SIPs are the special interest persons. KRA PIN, if you just want to confirm that. We have the swaps, the SIM card swaps, IMSI APIs. Lately, we've also incorporated the likes of the DIMVIC for insurance, geomapping, and many others. So it's basically just enabling the lending institutions to make quicker decisions, so faster TATs, and leveraging on data really to be able to make those smart decisions. That's in a nutshell what we do.
If anyone in the audience is familiar with Credit Karma is one of the top providers for credit in America. And at the time, it was sold, I think, for the equivalent of several $billion. And the acquirer at that time was Intuit. So Intuit bought them for $3.4 billion in cash and the balance in shares. And what Spin Mobile is doing is exactly what Credit Karma is doing, which is supporting lending institutions in all forms, particularly the non-bank lenders, so MFIs, investment groups, investment bank, anyone that is really looking to use data that is given and consented to by the borrower, and then use that data to make credit decisioning. That's exactly what Spin Mobile is doing. So it's like the Credit Karma for emerging markets, really. That's a little bit about Spin. Victor, before we go into the subject that brought us today, what really inspired you and Jonah? Jonah was an awesome person and an excellent engineer. But what really inspired the two of you to focus on alternative data? Because I know you were doing lending originally, and I remember dissuading you from taking money those early days. But what really inspired you guys to focus on alternative data as a solution to credit scoring challenges?
Very good question, team. You've heard about this. It's a common word now. They say, listen to the customer. Customer is king. That's exactly what happened to us. We already built a core banking system, selling it to lending institutions. And we met this one client who told us, Victor, my problem is not lending systems. I can be able to get that. Today, we are facing a challenge around NPL, high non-performing loans, defaults. And you remember that time COVID has just started in 2020. So this client told us, if I can be able to get a solution that can automate for me the analysis of customers' bank statements and mobile money statements, literally use that data to understand affordability and all those, I can really appreciate. We took the challenge and promised that client that we will be back to do a demo in 2 weeks' time. And Jonah was very bold gentleman because earlier I didn't know it was possible actually. But true to it, we were back there, I think probably 2-3 weeks later, like a demo of what we wanted to do. It was not the actual solution, but what we wanted to do. And that is it. That was really the journey that we then started. And then, of course, with time, we realized that there were a lot of problems in that space of risk management. If you remember that time, the government had just declared that some lending institutions could not list on CRB. There was a lot of information asymmetry. What I mean by that is very little about the borrower. And there's a lot of information that the borrower would have that you would not have as a lender. And of course, there was issues of over-indebtedness that were cropping up in the market. You would find there is a borrower who has done loan stacking. I think the record one I have ever seen and heard about is 51 apps. Literally somebody borrowing from all over, and you would not have that visibility as a lender. So we realized it was actually a much bigger problem than we had seen. So we then ran with that idea, built on it, now brought in the subject of today, which is alternative data, and what really outside there we can use, which is not conventional, that can be able to help lenders to make that decision. So that has been the journey, and we thank God we've come this far.
Sami, please chip in as well on this, particularly because the technology plays a significant role in what you folks at Spin are doing, and hopefully other folks like you. How does alternative data in credit scoring differ from traditional methods? I know that if it's traditional method, you're probably relying more on prior credit history, but how does what you do today at Spin differ from traditional methods of credit scoring?
Basically, traditional data, you would be looking at analyzing physical statements, which I'm sure is what's been happening in most lending companies. But when you talk of alternative data, you're basically talking about alternative sources of data such as e-wallet transactions, online presence, that could include social media and such. And this overall can help us to determine what Victor was talking about. For example, it can help us to do behavioral analysis, something like betting, for example, and such can help us to learn more about a person's financial discipline. And alternative data helps us in a huge way to access more of the person's life. And on a population perspective, especially in Africa, where we have a very huge population that's highly unbanked, we can be able to correctly credit score them and give them a score so that they can be able to access financial or other facilities, same as everybody else. Another very huge advantage between the two sources of data is the fact that with alternative data, we have increased efficiency in analysis and decision. Using the spin tool, you are able to correctly analyze a person's financial life within 5 minutes. If you were to go through their financial statements from the bank or whatever, you would take even 3 hours just to be able to make a decision. Also able to verify authenticity of data, and that reduces fraudulent cases. I've had cases where people take even another person's or another entity's financial record, and then they just use online tools to modify that. And if that statement is prevented and you don't have the technology to check if that statement is authentic in the first place, you will end up lending to the wrong person and therefore lose money. So alternative data sources, the potential is really high in increasing efficiency and in making sure there is overall inclusion of everyone. And most important, to have that accuracy in determining how much a person can afford and therefore how much people can be able to lend to them.
I asked an M-Pesa executive what proportion they consider cash to be vis-a-vis M-Pesa, and that's still an open question. But nearly 80% of all the payments now are M-Pesa. Are you telling me that if someone were to take my M-Pesa statement today, so their transactions are mine, but then their name is theirs, Spin Mobile is able to detect that?
We are able to detect modification, and but the statement is automatically rejected. So the lender is able to assess that within less than 10 seconds of receiving the statement.
That's interesting because that's otherwise not possible to do with ad copy review by analysts. Any additions, Victor?
Yeah, I just want to add a point there. What I've actually seen as one of the biggest benefits of this alternative data is triangulation. Basically, data should be able to verify itself. I'll give you an example. If this customer at the point of loan application or providing their KYC indicated that they operate in Thika Road, maybe Kahawa Sukari or Kahawa Wendani, or maybe roads, they run a small shop around that. Now, when you get data, let's say from mobile money statements, which actually provided by the customer, and you notice that this customer is literally doing their shopping every day in the evening in Langata, they take their lunch along Langata Road, probably shop at the Naivas Supermarket next to Langata Road. Literally, it's self-correct. So it's actually able to tell you there is something here that is not adding up. So that's really the beauty of having many sources of data. Remember, in conventional lending, what is called traditional data, it was mainly referencing. So it is historical and basically submitted by financial institutions. But now, if you have these many sources of data and confirmations coming in from these verification APIs, you can be able to verify most of these aspects. So you are able to carry out the triangulation. There is also the aspect of reinforcement learning. One of the things that we have done at Spin, and I'm really proud of the team, is ability to take customers' feedback and incorporate it in the scoring engine. So we would say, for example, there is this company that lends to mama mbogas, or they lend to people in the rural areas. Now, in the conventional scoring, it would be rigid, so it wouldn't really be able to change with the sectors and the scenarios and the customers you're dealing with and the data that you're actually getting from those customers. But we are able to incorporate the feedback from the client and say, oh, so if this is not working, which other data source can we be able to incorporate to make those models predictive, that we can be able to predict risk, be able to predict the likelihood of default.
A majority of Africa is still unbanked. So I'm really hoping that as more and more debt providers leverage on information and intelligence it might then be possible to mainstream credit a bit more because lenders fear default. I think our national default rate in Kenya now is about 15%. So every lender that lends money loses about 15% of their core capital. That's just really crazy because that hits into their core capital. And for that reason, anything that allows them to reduce that, hopefully, I'm hoping in the coming years, can also reduce cost of money, because if we can show lenders that better data can hopefully result in better collection, then hopefully that might allow credit risk to go low. What are some of the biggest misconceptions about alternative data in credit scoring that you've seen?
I think right off the bat, I would say the biggest misconception is basically how reliable it is. I think most people don't really know how reliable alternative data is. We have gone to meetings more than once, and when you're doing a demo, you show a person like the amount of data you are able to extract and how much information that gives you. They are simply shocked. And some of them, especially guys from outside Kenya, there's one or two guys outside, they're glad they're not Kenyan and they don't use M-Pesa, because we are very thorough in the way we're able to analyze a person. As a lender, you get that 360-degree view of the person, and it's very easy to make decisions after that. Something else is what Victor talked about. We usually think there's no verification of this data, but it's amazing how much you can be able to tell just by looking at a person's transaction, especially on mobile money. Most of the information we provide on KYC forms, we never think all those data points can be verified, but there's someone going through your transaction history carefully. And then I think finally, the biggest misconception is that this data is a bit narrow. You're not able to have a lot of information, but it's exactly the opposite. You have a lot of history to support the data. You can be able to combine different data sources. Currently at Spin, you're able to combine multiple statements. You're able to combine information from AML, for example, UML checks, do KYC checks. You're able to check data related to, let's say, a person's car and all that. And all this combined into one place really gives you a lot of support in making decisions that ensure you don't lose money due to default.
So a 360-degree view of not just what people say about themselves, but I think more important, what they've done, what they value, their behavior, their actual behavior based on their transactions. So Victor, maybe we can come back to you. How has Spin Mobile positioned itself in leveraging alternative data to do the kind of work you do, whether it's in financial inclusion or supporting people that want to really lend money, but then they want a bit more data points? And then you could point out other people like Spin if they are there in the market.
Before I get to that question, actually, there's something that's hitching I wanted to mention. You talked about default rate in the country being about, I think, 15%. I can actually tell you that the default rate in the country is not known because of, can I say, improper referencing. For example, ASLA fund, which has been, of course, accessed by many people, do not actually submit that data to any of the reference bureaus. So it is very difficult to tell. Out of about, I think the circles that exist in the country, about 6,000 informal, only regulated by SASRA about 600, 700, and the others non-deposit taking probably about 4,000 or so, and a very small fraction of that, probably less than 50%, submit that data. So there is no central point that we can say authoritatively this is the default rate in the country. And I'm really praying that even our regulators can start thinking about these things, especially the potentials that comes with open banking, sharing of information, of course, responsibly, and of course, factoring in the privacy aspects. Anyway, let me come back to your question, how we've positioned ourselves as a leader in this space. First of all, I think we keep on incorporating more and more data into our models. We have the statistical models that, when we talk about a scoring engine, basically takes data, which is parameters or data points, ingest that data points and be able to give us affordability, as I said, and also behavior-linked score. For that to be possible, you have to literally keep on adding more and more data. As we started, I talked about some of the APIs we've incorporated, and we keep adding that every quarter. So we will continue incorporating more data to just ensure that our clients that use this data become more predictive, more precise in that decisioning process. Secondly, we also now incorporate client data. We have some of the customers that, on top of checking what other data is out there about this particular borrower, We also check your transactional data. So if you've banked in that bank for 6 months or 12 months or things like that, or in that particular core banking system, you can be able to fetch that data via an API and be able to use that in generation of additional models that are more predictive. We also release new features every quarter. There's one that Sami has just mentioned a few minutes ago about what's called combined analysis and the power of that. Let me just explain briefly. Combined analysis means, as Victor today, I have 2 bank accounts. I have 2 phone numbers, both of them with M-Pesa. So if you really want to see my financial capability, it would be good to have all these 4 data sources. So Bank 1, Bank 2, M-Pesa 1, M-Pesa 2, combined together, and we remove what we call gross banking transactions. What we mean by that is my salary goes to the bank. I move that money from the bank to M-Pesa, right? And then I spend from M-Pesa. So if you analyze my bank separately and analyze my mobile money separately, you will get a wrong picture. You will probably think I'm earning double what I'm earning because it's the same funds that is rotating in different accounts. So what we've done is that we are able to combine all these data points, remove cross-banking transactions, probably even outlier transactions like, let's say your salary is about 500,000, but in this particular month, we have a transaction of 1.5 million shillings. We call it outlier transactions. And of course, that affects we call the volatility of that account. So we will have to remove that so that we get a true picture of your transactions or your capability as a person. So that's basically what I talked about, additional features and additionally continuously building the system to release those new features. Then, of course, now with the AI technologies, with the machine learning, more advanced OCR technologies, which are more sharper and more accurate in data extraction, because probably we'll still talk about that. Those are the things also we are incorporating in order to, one, extract better data insights that is going to help these lending institutions and to make our models more predictive, like precisely predictive on the level of risk or the exposure that you're dealing with before lending.
So just to ask our audience to please send us any questions that they might have. If they have any questions, if they have any comments, please send them to us. And then as we go along, Sami and Victor can tackle them. And I'm hoping that towards the end, we can also hopefully take in your comments and hopefully some questions. Can you share us any success stories, Victor, Sami, where Spin Mobile, your approach to credit scoring has made a difference in credit decisioning?
Yes, I can go first and then Sami can add to that. Yes, team, we've had quite a good success or probably feedback that you are receiving. Number one is great testimonials, and probably some of our clients could be listening. I have seen people writing on social media how this tool has helped them, and I do not know those people. One of my clients commented on my Facebook account when we posted about this. So there's been a lot of impact out there. We've also seen reduced NPLs, non-performing loans. Actually, we have written testimonials to that effect. How different institutions, one precisely reduced the NPL from 17% to 4%. Remember this, the biggest way of reducing NPL is to become more keener at the point of loan fulfillment or probably giving a loan limit to that particular client. If you have become more precise in your predicting of risk at that point of decision making, you reduce your cost of debt collection by over 50%. So I'm happy that Spin has played a role in that. Another point is in ourselves today, and staff of Spin, some of them are here, more than 50% of the signups that we have are referral based. These are people we don't go selling to them, but people call us and reach out to us. That is really like the impact. And Sami also mentioned about that effect. When we go for these presentations and we show how we can break down that data into very granular level and really explaining where and how and affordability and all these things, people get wowed at that level of analysis that is being done. I know we are not yet there. More is yet to be done, but I think the initial steps are already covered.
The central bank reported, I think, about 15% in non-performing loans last year in the whole country. Of course, there is still a lot of work supporting banks to do decisioning. How do you ensure financial debt inclusion, particularly for any underserved populations, Victor and Sami? Because most of the country is undeserved. Like, how could Spin, either now or later down the line, do better to serve undeserved population?
Sami, you can go first.
I think, Jane, when it comes to inclusion, the fact that we are able to use, let's say, e-wallet transactions to determine the person's credibility is a huge step forward to ensure that most of the population that is advanced is able to access the same services. But as AI progresses, we will continue to be able to use alternative data and more aspects of it to be able to make decisions to analyze a person's life. For example, social media is part of it, and being able to take data from all these places, which are used separately, wouldn't be able to make sense. But through pre-processing, you can be able to combine all of it in a way that makes sense. And from that, you can be able to make a decision. I think that the question is just more innovation and alternative data, and hopefully over time, we'll be able to credit score anybody from anywhere, whether it's a person from Nairobi or a person from a very remote place who doesn't even have a bank account, or probably all they have is a basic phone and an M-Pesa, a few transactions.
Interesting. So, Sami, what are some of the technical challenges you face today when you're using technology to collect, process, analyze alternative data for credit scoring?
One of the challenges that has been there, and we keep innovating around it's a problem that will always be there, is ensuring that the data used is 100% authentic. As technology advances, it's becoming easier and easier for people to fabricate data or to be able to tamper with data. And when you're credit scoring, you need to make sure that data belongs to the person 100%. Dealing with fraud has been one of the challenges. Another one is data integrity. And by data integrity, capturing data as is. For most countries, I know Kenya is very advanced in terms of tech, but in some countries out here, the best you can get in terms of, let's say, a statement is a scan statement. And sometimes it's not really well done. So being able to capture that and digitize it has also been a challenge. So on that one, we have developed a no-CR solution that we keep improving on. Another challenge is ensuring that the lender has the credit scores within 3 minutes, 5 minutes, and whether it's a tiny statement, 20 pages, or something with 2,000 pages, they are able to make a decision within 5 minutes. So this overall ensures that at some point, we'll not even need to have human beings looking at this data. We can be able to automate around this data because you can guarantee that the system would have already generated the expected output within 1 minute and can move on to the next decision. So those are just some of the challenges that we face and that we deal with every day.
What are some of the biggest financial statements, whether M-Pesa or bank?
I think we've met 2,000 pages worth of statement, quite heavy. But on average, if it's M-Pesa, it will be anywhere between 20 to 100 pages, not unless you're very intense with that. For banks, might be a bit more. For teams, they can be quite heavy because you can imagine some businesses have a lot of transactions. They probably deal with small amounts. Yeah, the statement size, very small statements to huge ones, depending on whether it's a till statement or an M-Pesa or a bank one.
So we have a question from the Moldoy. For those customers who deal in agents business, e.g. M-Pesa, equity, M-Pesa agents who move volumes of money, which is not theirs, how do you score them? So I guess their own revenue is not really the full turnover, but rather a small proportion of the volume because they would get ordinarily paid a small portion. Victor, how do you score those?
That's a very good question. First of all, when we get to analyze that statement, we're able to put the data into categories or we classify that data. So this could be the P2P transactions, somebody sending money to another person, or it could be agency transactions, agents like M-Pesa agents, bank agents, and all that. It could be spending transactions, so like supermarket, fueling, kinyozi, church, whatever. So in most cases, the people who, let's say, are only a channel of money, receiving money and sending it out, will always be on P2P or AV on deposits and withdrawals. So those ones will always be excluded. Remember what I talked about when I was talking about combined analysis? We have some terminologies here. We have the outlier transactions. We have the cross-banking transactions. We have transactions to watch, and also things like volatility. I'll explain each one of them briefly. So, like outlier transactions, if you get huge lump sum of money coming into the account and leaving the account, it will be removed. It will not affect the classification. Cross-banking transactions, those transactions that even if you do window dressing, because we've seen statements that do that. Like I bank with Bank A, I have Bank B, and they keep sending money to Bank B, send it back to A, back to B, A. So when you look at a statement with a naked eye, it looks so bulky, it looks a lot of transactions. But when you actually remove cross-banking transactions, you realize it's a bare statement. Same reference numbers, crisscrossing different accounts or back to M-Pesa and back to accounts. So we get to remove that. We have transactions to watch, like huge withdrawals after a deposit. So like money comes in and then you see one huge transaction. Now, those transactions, again, will have to be removed. Why? Because usually for your spending habits, especially when you want to tell about affordability, it must not be a volatile account. Now, volatile account is whereby the standard deviation to mean is greater than 50%. I have to break that down. Basically, it means if I normally operate at 500,000, right? Half of 500,000 is 250,000. If my account goes up by over 250,000, that is 50%. So the standard deviation, like the difference, deviation basically is difference. The standard deviation is more than 50% of mean. That transaction, we will have to mark that volatility as being too high. So if you check all these things together with classifications that we have done, like we can clearly see this is somebody who's doing window dressing. This is somebody who is an agent, ama ni mtu wa boda, ako na pochi la biashara, or is a supermarket agent, or things like that. So those ones can be removed when you actually do proper analysis.
Interesting. The other question is the system able to detect cross transaction from either bank and M-Pesa to crypto exchange? I think you've already answered that. I think the answer is yes. When you do combined analysis between bank and mobile, you are able to do that.
Absolutely, yes.
Interesting. Okay. How do you at Spin honestly ensure security and privacy of user data while you're leveraging technology to do credit scoring?
We really take privacy very seriously in Spain. And how will we ensure that the data is always put is basically by enforcing security around our system. To start with, our system is role-based. So this means the organization that's accessing the data or our client gets to give particular functions to their users. So not just anyone within there can be able to access the user statements or the data that has been analyzed. And then make sure that as an organization, the user must always give consent for their data to be analyzed. Currently, you know very well that with the data privacy and the Data Act, the user has the right to their data. They must give permission for that data to be accessed and can also revoke. For us, we ensure that every organization that signs up with us passes that down and is able to get permission to use that data through our system.
So consent from the data providers is the consent is one. Certainly
Yes.
security, or you're saying password, you're saying authentication. What else did you mention around security?
And controlling the user actions through permissions and through roles and permissions. Let's say you're an admin, you have a very specific function and you cannot access the data that an analyst would be able to access. So that aspect ensures that data is only accessed by only the authorized users in the organization.
Interesting. So the coming decades, maybe while you are still at that, before we go to Victor, analysts estimate at least this year more than 14 billion will be value that can be created by AI in the coming years. And over the next coming year, analysts, technology folks, AI folks estimate that AI will generate a couple of $1 trillion, maybe $30 trillion in the next decade. How are you beginning to think about utilizing AI, machine learning, and data science in analyzing alternative data for credit worthiness?
So definitely AI is very key because it plays a very important role in transforming how data is used and how we interact with the data. In the coming future, definitely it will help us to utilize more data sources. I've mentioned about social media and mobile data. It will also help us to predict a person's financial creditworthiness using existing behavior indicators. And this is now the biggest advantage to society. It will ensure that there is more inclusion and fairness because traditional data methods tend to exclude more people. With traditional data methods, you must have, let's say, a statement, but a person in a very remote area who hasn't banked a lot, with AI will be able to analyze their life, and basically rely on any data about them that we can find to combine all that and come up with credit score that we can use to make a decision. A very big thing about AI is it will help to get credit scores in real time. And I think probably, and this is where Spin will be heading, is to be able to analyze and centralize the data in that way that you yourself as team, you can walk anywhere and just give, let's say, your ID, and immediately they're able to know how much they can be able to lend to you without having to submit so much information to them or going through so many processes. That's how we see AI and machine learning changing credit scoring.
So the equivalent of you can sign in to any lender, to any insurer, to anyone that give you credit with just, let's say, for the sake of this discussion, a spin account. And with a spin account, you don't need to fill forms. Today, if you have to get a mortgage, you need to upload your pay slips, you need to upload your bank statements, you need to fill a certain bank form, you need to submit your data, which is KRA PIN, ID. And I think if I remember correctly, I think Victor mentioned that you're already integrated to a number of these APIs that can make it possible so that with just a simple data as your phone number or your ID number, you can give consent to a debt provider or a loan provider in order for decisioning to happen quickly. Do I get you right?
Yeah, definitely. Being able to aggregate all your data, and then you can walk around with an ID, and immediately a lender is able to get your score in real time. That will be one of the biggest benefits because it will speed things so much.
Interesting. I was wrong about the number for how much analysts estimate. I've just looked it up. AI value creation by 2033, most analysts think that it will be anything from 13 trillion to 22 trillion, with about $3 to $4 trillion coming from generative AI. And of course, it's all the sectors, whether it's retail, finance, transport, high tech, oil and gas, agriculture, and any sector that we have not even imagined today. Just so that we can now wrap up this, Victor, how can financial institutions, fintech companies collaborate to scale the alternative use of AI? I know that you have a number of clients today, 200 or so, but how can more companies come today and leverage the alternative use of data in credit scoring?
You, team. I think it calls for better integrations. What I mean by this is responsible information sharing so that it benefits both the financial institutions as well as also the tech companies within the finance space. I can give you an example of how we've worked with some of the core banking providers to make it very easy for the lender. So like we have lender A Microfinance Limited or A Bank Limited. The core banking provider is already integrated with us. So that makes it very easy to serve that particular customer without paperwork and things like that. So it would call for better integrations, responsible information sharing. And of course, there are frameworks around that. I was in a meeting today where we had the CIS Kenya and also the CA were available also in that meeting, and also some of the CRBs. And the conversation really was, how do we make sure that we move Kenya towards open banking direction? Because if you look even at the Data Protection Act of 2019, of course, it is centered on consent. But at the same time, that act of parliament, which is now a law, literally gives me as a data subject the right that I can be able to tell my bank that I want my data transferred to this particular institution in the format I prescribe. That's actually in the act if you read it carefully. So I think the future would be around how we can have these better integrations, how we can have a regulation about open banking. And it's been done by other countries. If you look at Nigeria, that is already happening with the NIMIS. It is actually possible that it can be done.
Yeah, so anyway, for the sake of the audience, the Central Bank of Kenya in 2020, as part of their new strategy at the time, which is going to end next year, their strategy document underpinned open banking, allowing me and you to share our data in an anonymized format to third-party applications in a secure way. Then because of your data, you can get, say, cheaper insurance, you can get better offers, you can get, say, mortgages. Because the bankers or the lenders have a bit more intimate data about you, you can then enjoy better financial services. I think that's really the spirit of open banking, as it were. And it's already happening in a area. With a single number, you can apply for credit facilities across multiple financial institutions. Victor, how can alternative data solutions be adapted for SMEs and particularly informal businesses that lack traditional credit histories? Because if you remember the legal notice of 1978, rather, that legal notice said and predicted correctly that by 2000, we would have 6 million people unemployed if we didn't do either of two things. One is formalize SMEs, and the other one is invest in agriculture. Of course, we just never got around to formalizing small and medium enterprises, and we never even invested in agriculture. Now, this government is trying to see if they could do that with mixed successes. How can we honestly adapt this? Because if we were to power SMEs and they could get cheaper credit, then being providers for 70% of the jobs in the country, we could really be in a position where we are actually creating more productivity, we're creating jobs, we're creating wealth.
Very good question, Tim. Of course, a lot of focus right now is into the SMEs, the mamambogas, and how we can be able to help this level of customers to be able to access credit. Now, the biggest challenge has always been the informal businesses do not have any traditional records. If you check the CRB, and that was also part of the conversation today, it would give you zero score. Basically, it means we do not have records about this. That should not be the case. Going forward, there should be never a zero score, because at the same time, with these informal businesses, there's also a lot of data out. Like, these people have mobile money accounts, they have SIM cards. Actually, we are being told by Communications Authority that we have 68 million SIM cards in circulation in Kenya today. 68, while less than 40% of that are banked. So it basically means you can be able to use available data, and that's why we were talking about alternative data, to be able to come up with the scoring engines that can fit this sector. And I'm happy because we are already doing that today at SpinMobile. How we can be able to have data points, specifically customized scoring for this sector. If you're dealing with farmers and these farmers do not have, let's say, any bank statements or any other data, we can be able to use what is available with this customer and incorporate that in our scoring engine and use it to be able to score you so that you can be able to access the financial services. So banking data really should not be a condition for these customers so that you can be able to grow them and it supports the economy.
Yeah. We have a few more questions from the audience. This is Edu Speaks. Besides financial institutions benefiting from Spin Mobile analysis, which other industries have successfully utilized the services? That's a very good question, actually. And I think it's coming at a time when we've just spoken about SMEs. What would your answer be to that?
When we actually started, it was more microfinance and banks. But with time, we've actually seen we can serve a broader customer base. So this includes the buy now, pay later providers, mobile lenders, SACCOs, the auditors as well have been added into that. We have a number that have signed up. Actually, SACCOs are becoming more and more popular in our customer base. We have leasing companies. So these are people who were initially not part of our customer base, and even investment fund managers. So this list is growing. And we are also rolling out a B2C product. What I mean by B2C is us directly dealing with you as an individual. If you want to have a clear understanding about your financial standing, let's say in the last 2023 or 2024, right? Or you want to analyze your financials as a family. You want to see where your big spending was on, where you can be able to improve. And we can also be able to give you automated financial insights. That is already in the pipeline and it's coming up so that it can also be used by individuals in that manner. So our customer base is growing. And of course, the game changer is what we talked about, Spin ID, that with time, I should be able to go around with my SPIN ID, and with that, I should basically get services because of that. Like it becomes my tickets. That if I show up at a bank and I be able to give that SPIN ID, it should be able to define my ability to pay, my willingness to pay, and of course, the rating and the analysis that has been done about me.
Interesting. Chris Mandela is saying with recent developments in tax collection measures, many people and businesses are moving back to cash economy. What's the way forward to get reliable data for companies like Spin Mobile? Sami or Victor?
As I said earlier, the way forward, and I think how the future looks like, is we need a lot of innovation around data to be able to continue providing accurate credit scores and credit scores basically for everyone. So yeah, I agree. Moving from mobile transactions from digital transactions to cash can pose a challenge, but it's not 100% off because there still be bank transactions and such. And the more we continue innovating around alternative data, will still continue providing reliable credit scores. Remember here, the goal is to continue advancing and to utilize AI and machine learning to be able to credit score even the person without any data per se with regards to mobile transactions or bank transactions. Basically, the simple answer to the question is we are consistently innovating around data and we'll still be able to provide credit scores for everyone.
Initially, when the word got out around will M-Pesa survive the tax collection payment point, what many people didn't realize is that it's actually not M-Pesa, it's all digital payments. So that even if you have a bank account, any digital payment actually is prone to be potentially become a tax collection point for KRA. I think it's true. It can pose a danger, as Chris points out. But I think where we are is there's only so much cash you can honestly transact. Cash is risk, cash is laborious, and you hope that many more people will prefer not to do cash than they would just digital payments. Victor, what do you envision is the future of credit scoring in the region, in emerging markets in Africa? Do you think alternative data will fully replace traditional methods?
I just wanted to also to add something on Mandela before I get to your point. One of the key roles that we've actually done is to automate what was done manually. So lending institutions still have a say whether they still want to deal with that customer who does not have any records whatsoever. So if you go fully cash, you're actually reducing your chances as well of accessing credit. Of course, as technology players like ourselves, we want to make sure that we can still be able to credit score a customer without necessarily relying on historical data. So triangulation and all the APIs that I talked about. But I just felt like mentioning that, yes, it might look an easy way for people who are running to cash, but in the long run, it comes to bite that you don't have enough data as well where people can trust you. So about the future of credit scoring, yes, team, I think more and more technologies are coming out, especially on AI and machine learning, that can now break down data into really tangible insights that can be used for credit scoring. So more and more companies will be using that. As Spin, we also already into that journey, and we will be working on that. What I'm also seeing unfolding more and more as well is risk-based lending. So more institutions are now saying, hey, my cost of capital is a factor when I'm pricing the loan. And so if how I will then price this particular loan is also going to be dependent on the risk I'm exposed to. So what that basically means is, because banks are now starting to go that direction, they will need to rely more on credit scoring that can be able to map out a customer's risk profile properly. So that by the time I'm saying, Victor, you can access this mortgage at 9%, this other one at 13% or 12%, basically because of the risk exposure, they will need tools and technologies that can accurately predict that risk. So I'm seeing more and more adoption in the future around credit scoring tools. Now, whether it can replace it fully, I don't think so. It will complement one another. Like what we do today, I'll give you an example. We are also integrated to CRBs, a CRB to be precise. So those who still want to check a CRB, you can be able to do that from Spin platform, because we would want to give you access to historical data, what has been submitted by other institutions, even as we now go into alternative data coming in from mobile money transactions, your transactions history, and all that. So I think it will continue working together, and it will be better for this country if we have a much more stable referencing system. Like have more people reporting that data, building into that ecosystem of the referencing. Really, because if you look at the advanced technologies, advanced countries, that is very advanced. And we are lacking behind. Because today, I talked about Asla Fund. If you say that Hustler Fund cannot submit that data to CRB, basically what you're saying is that if you default, really there's no recourse. Maybe government would find ways of doing debt collection, but it would have been easier if there was a working referencing.
So, Victor, how do you plan to scale Spin Mobile's credit scoring across other markets? I know you had a footprint in Tanzania and you're looking at Uganda. Which other countries are you in and how are you planning to scale?
So we are in Kenya, Tanzania, Uganda. We've also gone live in Ethiopia, though not active right now. And so what we have in mind is Nigeria and Ghana. And basically, it is also client led. So we have customers in Kenya that we are serving already that they are saying, we need this service in Ghana. We need this service in Nigeria. We now have a Pan African Bank on board, also that needs that service across many countries in Africa. So that naturally means we follow our clients. And that's exactly what happened in Tanzania. One of our leading clients said, this service is good. I need it in Tanzania. We had to travel to Tanzania, map out the place, and actually launched. And today we have an active market going on. So I see more of being client led and then more also around new technologies on AI and ML. As we speak today, we're reinventing or re-innovating around data extraction on OCR. So with time, you will see much more accurate extractions.
What advice would you give startups that are looking to innovate in credit scoring, the use of alternative data, based off your experience in the last couple of years?
I can go first and then Sami can also add his voice. I think to be agile, really, anybody who is venturing into technology space, be ready to change. Remember our story of how we started by being a lending company and it's a customer that requested us to do this credit scoring. We were not to get into it. So it was client led. So I think be more agile, be willing to try new technologies. A lot of technologies are out there that we can leverage on. AI is actually not bad. It is force multiplying. So we can be able to leverage on that. And my last and very important advice is let's be responsible users of subjects data. Sami talked elaborately about what we are doing as Spin. And I can tell you, team, we've been live for the last 5 years. We've never gotten even a single data breach. I'm not saying we are perfect, but we are trying. And I really wish everybody who is handling subjects data, people's data, to be more careful about it. Yeah, so let's be more responsible users of data and be willing to try out new technologies. Sami?
I think for me, I would just reiterate on what you've said, specifically on making sure you listen to who you are targeting your customers really need. And I think that's one of the things that have really helped us to innovate and to keep improving on the product. It's not an easy thing to do perfectly, but it really ensures that you are solving real problems and people find your product to be very useful and adaptable. That's something I would tell any startup or any company that's starting up and that's trying to find its footing and make a difference.
I think that's a good place to close. So just to tell the audience, please, anyone that would like to make a comment, to raise a question, please raise your hand. In the meantime, I will bring up one more question from Kiprop, who says, what happens to people dealing with charitable organizations who are tasked as treasurers responsible for payments? And then while at that, are there plans to integrate alternative data to score the tenants?
Tim, I think I had answered the first question
Okay.
on people who are treasurers and all that.
So the second one is, are there plans to use alternative data to score tenants?
Yeah, actually, we have one of our customers today who is actually somebody who wants to check like IPRS verifications. He's already a live client, actually. So if you want to rent one of the houses, one of the things they do is they use our technology to verify the details you provide. So ID number and all those other details are verified through the platform. Technology is permeating to all sectors. And we are not ruling out that how we can use technology for verifications and also for credit scoring.
So hopefully one day, if you are a tenant, you just walk in with a Spin ID and then you're on your way to getting accepted. It's not a big deal now in Kenya, but I think increasingly over the next coming years, it will be. In Europe, in America, there's a lot of KYC, like a lot of scoring that needs to be done before someone accepts to take you as a tenant. If there's anyone that would like to ask a question or make a comment, now is your time. Ask the questions. I've seen Chris. Yes, Chris, go ahead.
Mine is a comment. Thank you so much for hosting this space, Mwango. Thank you for all the speakers. It's very inspiring to see Kenyan business doing such amazing work. It's very revolutionary, and I'm wishing you all the best. Sami, CTO, great job. All the best. Thank you.
Thank you. Thank you so much, Chris.
Hi, Tim.
Yes.
I would really like to be answered on that charitable organizations? Maybe I missed on the answers from Victor.
So basically what I was talking about is when we get data, we just do not accept it as is. First of all, it has to go through some classifications. So what I mean by that is data is broken down to about 18 classification or 18 areas. So this would be P2P payments. So people receiving money and sending out money. And that's where treasurers mostly are, because they don't spend that money. They receive and probably channel it to a bank account. So out of the 18 classifications, a normal user should be in at least 7 of those classifications. So we are able to map out people who are just receiving money and sending out money. So agency transactions have their own section. The P2P transactions have their own section. We have the cash flows, which is money in, money out, flowing and going out. The spending habits, the spending, basically the lifestyle, things like supermarkets, school fees, fuel, restaurants, entertainment joints, church, all these other spending that happens, even the likes of betting and all those other aspects are classified. So each of that classification will have an impact on the overall score and how we will do the scoring about that data. So it is easy to mark out a statement where somebody is just receiving money and sending it out, or maybe pochi la biashara and things like that. And then, of course, you remember what I talked about, the number of things that we check, the outlier transactions. So if a transaction is overly exaggerated, high or too low, we remove that. The cross-banking transactions, it's called window dressing. You make your statement look beautiful, but it's actually the same money that keeps rotating from one to another. We have a section called transactions to watch. And then lastly is volatility. So we check that is the statement, how volatile is it and all that. So we are easily able to remove statements that the money is just coming in and passing out. And we can take up that separately, my brother, because we can actually take you through a demo of how that is done. I also saw a question, Tim, that was asking about betting. I think there was somebody who asked about how do you achieve credit score from betting data? So it's not about just betting and winning bets, but financial prudence dictates that anybody, and this is again verified by data, anybody who bets more than 10% of their income have started believing that betting is source of income. Betting is not source of income. Betting is supposed to be like a hobby, it's supposed to be like a game. So when you do more than 10% of your income, higher chances that this individual will actually go ahead and bet the funds that they're borrowing. In fact, we have something in our system called trend analysis, where we also check all the monies that have been borrowed before. How exactly is it spent? How is somebody using that money? And if you have an individual where they received the money and then it went to X betting company, that of course is a red flag that of course will negatively impact on your score.
Thank you so much, Victor and Sami and the Spin Mobile team and the audience. Thank you for the opportunity to do this together. Have a good evening.